Right, Pallavi. So as you rightly mentioned, well, the stock has grown around 5x since 2022, which was its low around July. The stock was around at 41 rupees, whereas now it has touched a life high of almost 200 rupees. Now, if we take a look back on how Zomato went down to almost 41 rupees, where multiple things, inflation-related headwinds were hitting Zomato, COVID was hitting, the delivery cost for both Blinkit and Zomato was extremely high, and the Zomato, the entire company was running into losses both in terms of EBITDA as well as the PAT. So this was the situation when the stock was down to 41 rupees, but the stock has recovered since then. The trajectory of the recovery was like in Q1 FY24, that was the first quarter where Zomato posted its profits. It was the first quarter where Blinkit business contribution also turned positive. Now, a quick view on what is working for Zomato. Well, Blinkit is showing a very strong performance. One thing, there's an entire turnaround strategy that has taken place in Blinkit. Quick commerce business is shaping up very well. The quick commerce growth is improving the margins for Zomato. Plus, the rate takes have improved significantly. Now, this is on account of increased platform fee, ad income, and commission revenue. Now, management has given some kind of guidance going forward, where they expect adjusted revenue to grow north of around 50% in the next few quarters. No plans for dividend payouts. They will be accumulating cash, and they will be prioritizing Blinkit growth as it will lead to margin improvements. Now, there were certain a slew of brokerages that have given their views on Zomato. Well, Jefferies has said that Zomato remains the top picks for the next 5 years. The price target of rupees 400 is what they are offering. This is an upside of almost 150%. The low penetration level in core segments offer is something that will lead to growth for Zomato, and the profits will rise 20 times over FY24 to 30 is what Jefferies is saying. There was a Citi note on Zomato which is given a target price of 220 as of now with an upside of 15%. They're saying that they raised quick commerce estimates by 8 to 2%, and they've raised their adjusted EBITDA margins by 100 BPS for FY26 estimates. And lastly, in terms of valuation, there was a CLSA note where they've said that they would now moving to PE valuation. Since the company has turned EBITDA positive, they're moving on to PE valuations and move to DCF, and the FY26 will be valued on the basis of PE, and the estimates given are for 25 and 26 are at 56.6 and 25.9. So this is the entire turnaround strategy of what has worked for Zomato exactly.